Welcome back to Operation Freedom, folks. I'm Dr. Dave Janda, broadcasting from our ancillary bunker link to remain Freedom Bunker in the People's Republic of Ann Arbor. We're here for you every Sunday from 2 to 5 Eastern, 24/7 with extra shows, content, guests, analysis, archives to all of our shows. We are always on call for you at davejanda.com. Please stop on by. I guarantee you, when you come to davejanda.com, you will be educated with information you will never get through the bought-off lamestream fake media or, frankly, from other platforms, and thereby become empowered. Our goal is to put you ahead of the curve. Now, the focus of today's show, as you know, has been, this is great. We're making huge headway over the past 2 weeks. But, folks, in reading the tea leaves, I believe we are on the cusp of a financial reset, a currency reset, a debt reset, and we're seeing this play out with these huge quantities of physical gold and physical silver, historical, flooding into our country. There are people that are saying this is all related to the tariffs that President Trump is putting in. I don't buy it. I think that's cover. I think what this is doing is shoring up, because remember, there's a real question because we haven't had our gold reserves audited since 1956. This is trying to shore up at least some physical gold and physical silver in our country on hand when this reset occurs. And when that reset occurs, much better to have President Trump there than Biden or Harris or any of the rest of the globalist shills. No, but I can't think of a better person to have with us at this point than Bill Holter. You know, Bill, the bottom line, is the best forensic economic analyst in the world. He subspecializes in precious metals. His website, chock full of great information, Bill Holter, Holter, BillHolter.com. He was formerly partners with the great Jim St. Clair, who passed away. Jim was always known as Mr. Gold. Well, when Jim passed, he passed the torch to Bill as Mr. Gold. I can't think of a better person to have with us than Bill Holter. Bill, welcome back to the Operation Freedom Show and platform.
Thanks for having me, Dave.
Okay, Bill, am I misreading this huge amount of, unprecedented amount of physical gold, physical silver coming into our country as being significant? Am I misreading that?
You're not misreading it at all. I believe that when all is said and done, people will understand that this is a matter of trust, and you don't have to trust an ounce of gold or an ounce of silver. They can't default. They cannot bankrupt. And what's happening is, gold, you look at gold at all-time highs. Yes, that's true. But the reality is all currencies have collapsed to all-time lows in purchasing power.
So, Bill, in historical terms, can you educate our listeners about how much physical gold and how much physical silver has been flooding into this country over the past 2.5, 3 weeks in comparison to other time periods?
Well, just the last 2 or 3 weeks, it's been completely unprecedented. 400 tons of gold, just to put that in perspective, if you go back, I think 11, 12 years ago, in 2013, Germany wanted to repatriate 300 tons of gold from the Fed, from their vault. And they were told, well, yeah, we'll send it to you, but it's going to take a long time because that's a lot of gold and it's a lot of value. It was only 300 tons. And I did the research back then that a 747 cargo plane could carry 95 tons. So, they could have done that in 3 plane loads and a small one to clean up the scraps. And it took 2.5 to 3 years to be done. And when the gold finally all got to Germany, none of the gold had the hallmarks of the gold that Germany originally deposited. So their gold went somewhere else and it was replaced with gold. They got their gold back, but it was not the gold that they originally shipped. So now they said that it was going to take 2.5, 3 years to get done, and that's how long it took. And here we're looking at 400 tons in less than 20 days. And don't forget, gold was $1,200 an ounce back then. Now it's $2,800. So in dollar terms, it's almost tripled as far as what the amount of gold being shipped in this 20-day period of time versus what they said they could not logistically ship 10 years ago.
And the same is true with huge amounts of silver coming into our country, correct?
Yeah, that's correct. But gold is the flashpoint.
Yeah.
Because February has huge amounts of contracts standing for delivery, and they've got to address that first. And then the next would be silver, and that has huge open interest for March. So silver is going to follow gold. I suspect the gold deliveries will be made, and it's my guess that silver has some type of default, whether people are paid in cash or whatever. I don't believe that silver is going to exist to make those deliveries. So I think March is going to truly be the flashpoint.
So, Bill, people hear about the Comex based here in the United States, and they hear about the LBMA in London exchange. Now, if I say to you, the LBMA has a physical component side to it, physical metal component side to it, and the Comex here in the United States is really one of a paper-based exchange. Is that a fair statement?
Yeah, that's absolutely correct. And really for the last, I guess, maybe 6-7 years, when there were heavy deliveries on Comex, what they would do is they would clear those with EFP contracts. That's exchange for physical contracts, and that gold would be delivered out of London. Now, the problem with the EFPs is that you can't really see behind the scenes, so you don't know whether the gold has actually been delivered, or did the owner of the gold, did they accept the value in paper plus, say, a 20% kicker for people to keep their mouths shut? And I think that's what we've seen. The deliveries were pawned off from Comex to LBMA, and I'm not so sure all those deliveries were made. And Dave, it's important to understand why all of a sudden the demand we know the demand for silver has been huge just because of all the uses. And obviously, the Green New Deal with solar and all, that uses so much silver. So the demand has been exploded for silver. Now, gold is a different story. You got to go back to October of 2023, and that's when gold bottomed at the high 1600, low 1700 level and started moving higher. And that coincided one day after the Russian $300 billion worth of treasuries were confiscated. The world is looking at that, and the world is saying, hey, wait a minute.
Right.
If they steal Russia's foreign reserves, they can certainly steal ours. And that's why the shift into gold. They're selling treasuries and buying gold that they can physically hold and not be taken from them.
And to add fuel to the fire, Bill, if we look at the LBMA in London, if Bill and Dave decided, hey, we're going to take delivery on some gold through London, in the past, if we did that, it would take, 2-3 days, right? But this week they announced, well, if you want deliveries on gold, it's going to be 4 to 8 weeks, correct?
Right. Yes.
Okay, so educate us on the significance of that, because to me it means they're running dry. What does it mean to Bill Holter?
Well, what they're trying to say is that they're too busy, and the reality is they're running dry. The reality is the demand has finally I mean, the demand has been greater than supply, but past inventories, past reserves have been used to make the deliveries. And those, it seems, have dried up. And at the same time, the demand has exploded. They're trying to pawn it off by saying that, they're doing this for tariffs.
Yeah.
I don't believe that for a second.
I don't either. So, Bill, there's this really smart guy. I think you know him. His name is Bill Holter. And for years he said this entire fake price mechanism for precious metals that has suppressed the price of gold and silver, it's going to come down to someday there's going to be a failure to deliver physical metal. And that's what's going to take the whole thing out. Bill, tell me if I'm off.
No, that's right. I've said it.
That's where we are now. That's where we are now. Am I off?
No, we're exactly right there. And like I said, I think the deliveries will be made for gold, but I think silver. I think that I've always said that I thought the failure to deliver would be silver, and it's looking like it's 30 to 45 days out. When you say the whole thing, let's make sure that your listeners understand it means the whole thing. It's not just the gold and silver markets that are going to break. Gold is a direct competitor to the dollar. So they've had to try to suppress it for, forever, since the late 60s in the London gold pool. Once gold fails to deliver, silver's going to go first. When silver fails to deliver, immediately it will spill over to gold, and there will be buyers demanding delivery immediately, and then the next cycle, the next month, probably I believe May, then gold is going to fail to deliver. Failure to deliver, what that does is tells you that these contracts are fraudulent.
Yeah.
So now, if you've got other commodity contracts, you've got pork bellies or you've got oil or whatever, those are all going to be called into question. So basically, the rule of law is going to be called into question because the value of a contract that cannot deliver is worth zero. And you just so happen to have over $2 trillion of derivatives worldwide, which includes all commodities. It includes all currencies, all equities, stock markets, and most importantly, all sovereign treasury markets. You've got credit default swaps, et cetera, et cetera. They're all going to fail because what's happening here, the failure to deliver, is going to break confidence. And this has been a con game. It's been run on confidence since 1971, when the U.S. dollar was no longer backed by gold. It's been pure confidence, and it's taken many, many years, but the confidence is now going to break.
And as you mentioned, there's a disassociation between paper contracts and the real thing, physical, that these fraudulent paper contracts have essentially been printed like confetti, telling people that there's backing, physical metal backing to these contracts when in fact there isn't. So in other words, we're playing a financial game of musical chairs. And there are 100, tell me if I'm off on this, Bill, as an analogy. We got 100 people, we got 1,000 people walking around and with the music playing, and when the music stops, everybody sit down. Well, they're all walking around, these 1,000 people, and there's one chair. Am I off?
Only a little at my size. I think the number is actually 300. It's between 200 and 300 paper contracts. Ounces.
So there's 300 people walking around, 200 to 300 people walking around, and there's one chair.
Correct. Exactly. There's 1 ounce for the 300 people who believe they own that ounce, and they're going to find out that they don't. And like I said, it's going to be it'll be a break of confidence. My late partner Jim once, I said this several times. when he was talking about Comex contracts and asking what's the value of a contract that cannot perform. He sufficed that the day could come where you could see Comex gold contracts being offered at $10 per ounce and no one willing to buy them, and gold, physical gold, at $100,000 an ounce. That's the bid, and no one willing to sell. That's how and the number could be way higher than that. The number could be astronomical.
Right.
But the point being, paper is going to burn. It's going to go to zero, and either you have metal or you don't have metal, and you're going to count your wealth in ounces.
In ounces. So, folks, we're speaking with Bill Holter. Bill Holter, Holter, BillHolter.com. Bill, play out the next 2 months.
I think it's going to be a nail biter over the next couple of weeks with the gold deliveries.
Yeah.
And as I said, I think those will deliver. I believe that silver may not deliver. I think March could be the month that silver fails. And you cannot have silver fail without buyers targeting gold, saying I want as much as I can, as fast as I can, and inventories will be completely overwhelmed. When the contracts fail, that's going to spread like wildfire through all other commodity contracts, and that's obviously going to spread to currencies, spread to sovereign treasury debt. So the jig is up, it looks like.
Well, and then we have this to add more fuel to the fire. Amid London gold turmoil, monthly report from the Bank of International Settlements is missing. This from Robert Lamborn. The Bank for International Settlements in Basel, Switzerland, has not published its December 2024 statement of account during January 2025 as required by the bank statutes. This is unusual, to say the least.
Yeah, I think it's the first time. I can't remember any time that the BIS did not report.
And this was his conclusion. Possible controlled or uncontrolled ending of the United States and UK gold price suppression policy are plausible. High debt levels in the world's two largest economies are reason enough to believe that gold price suppression and silver will end soon with currency and debt devaluation.
It's the reset.
It's the reset.
It's the great reset that people have been talking about for 10 years. And it's finally here. It's happening before your eyes. You're watching history. I mean, Dave, the month of January, with everything political and financial, the month of January had a decade's worth of change.
Yeah.
In 30 days. And I think it's leading up to, if you want to call it, a century's worth of change in a week's time when all this happens. Because think about it. I mean, the dollar has been the reserve currency since 1944.
Yeah.
So, we're 81 years out from that. This is the changing of the guard. It's a changing of the thought process in financial markets.
So, Bill, remember in 2017, right after President Trump got in Trump 1.0 administration, he sent his Treasury Secretary, Steve Mnuchin, to Fort Knox. And Mnuchin, before he walked in, because he had been involved in the movie industry, also an alumnus, if you want to call it that, of Goldman Sachs, said, wow, wouldn't it be an interesting movie if I went in there and there was no gold? And he goes in and he walks out about an hour later. Now, there hasn't been an audit of our reserves, our gold reserves. He walks out and says, not the gold is good, but gold is good, correct?
Yeah, and he told the truth. Gold is good.
Gold is good. Yeah. Well, so are French fries.
Anything at all about whether the gold was there or not.
Right. So could this massive influx of physical gold and physical silver be based on the information that President Trump had all the way back in 2017? He knows we don't have the gold that we say we do, the 8,000 tons. And what he's trying to do is get as much physical metal into this country under the guise of tariffs, when in fact it's to try to shore up what we don't have.
I'm not sure that it's that long of a time frame. I think it's an immediate time frame to meet the immediate deliveries.
Okay.
In my opinion, what's going to happen at some point, and I think it will be during this administration, I believe that, first off, North America, the U.S. and Canada are considered about the safest havens to run a mining operation. And in my opinion, I think in order to fill the treasury back up with gold, it's my opinion that you're going to see nationalization of mines.
Nationalization of mines. Wow.
Right. The production, well, maybe not outright nationalization, but the production has got to be sold to the government. There's many governments that do that.
Right. China does it all the time. I mean, does it 24/7.
So, correct.
Bill, people say, well, okay, if this is going to happen, and I don't know if there's any way of knowing this, what's gold going to? What's silver going to? Is there any way of knowing?
There's absolutely zero way to do the math with either of them. I mean, the gold, you can't figure a number in dollar terms because we don't have the numerator or the denominator. We have no idea how much money supply / credit is going to be issued. And we also have no idea, we know the max gold that the U.S. could have would be 8,300 tons. And my guess is it's probably under 1,000 tons left.
Yeah.
So you don't have a firm number on top or bottom, so you can't mathematically come up with a number. All I can say is the opposite of zero is infinity. So, I mean, you could see stupid numbers.
Right.
And just for example, back in 1917, an ounce of gold in Germany was 170 Reichmarks. By 1923, it was 3.7 trillion Reichmarks because the Reichmarks had zero value.
Bill, in our final minute and a half together, educate our listeners on how they can get in touch with you. You are a broker for Miles Franklin. How can they get in touch with you, follow you?
Yeah, you can go to my website, billholter.com. I post stuff pretty much every day. There is a contact button there. If you do want to contact me regarding gold or silver, my business email is bholter@proton.me.